Good evening, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog www.fibonaccistalking.com, and today is October the 7th, 2012. It's Sunday and it's 10 to 8 p.m. in the evening Italian time. I wanted to do this weekly review for the US dollar versus the Japanese yen only for subscribers, and but subscribing to my newsletter, it's free. You can do it on my blog. On the left side there is a link to subscribe. If you do that, you will get content that I usually do not publish on my blog. Anyway, on my blog I do every day daily review for the euro dollar, and that's for free, and that comes in two languages, English and Italian language. I'm based in Italy, near Rome, so it makes sense for me to provide an analysis in Italian language as well. Let's move to this pair, US dollar versus Japanese yen. This is the weekly chart, and let's see where we are on this chart. We had this measured move lower. It eventually hit target and went through the first target at 81.50 in the 81.50 area, and after that we had a violation of the trend, because as you can see, even though the market went above the 83 level, even though it got to a lower low, it made a lower low, but anyway this move lower seems exhausted at the moment. However, if the longs were able to break the shorts, the back of the shorts, the long were not able to defend the next measured move. And when that happens, we know what this is. This is a wedge, and we can trace it here. So price is moving laterally, is moving sideways after this big move lower here. So we know very often where this kind of consolidation go. They actually continue in the direction before the consolidation took place, and this seems to be aligned with the fundamentals at the moment that see the dollar very, very weak in the coming weeks. We are still not there in the short term, but eventually the dollar should continue going lower. We use should because we never know in the markets. Now, so we expect a continuation lower. Let's move to the daily chart. Let's see where we are here. Now, we know that in the last 3 to 4 weeks, maybe even more, the dollar will keep moving higher. That's my expectation, at least. I mean, the price might do exactly the opposite, but I have this expectation, and I showed you on the other charts and other analysis that the current behavior of a lot of pairs is aligned with this expectation on the dollar. Now, if that's the case, then we should see a continued move higher here. And the next measured move for this pair, it's an extension that has support in the 28, 20 or 30 area. So if this area is retested on Monday, this will probably be a very good entry point with a stop below 78.10 or 78. And as we can see, we also have the 20-day moving average supporting price. So I would expect the 78.94 and even the 79.30 area to be hit in the next days, and we should then continue higher and keep moving into this wedge we identified. I expect this pair to get into the 80-60 area here, and maybe that's the top for this market, the relative top for this market, if the dollar will start going down on the intermediate and long term time frame. So that's what we expect. This will move higher in extension moves probably, and this should continue until the dollar start reversing. And that's it for this pair. I hope this is useful and interesting for your trading, and check out my blog and the videos I publish there. And if you subscribe to my newsletter, that's for free. I will send one newsletter every week. Will not flood your email, and I also have a very strict policy on the way I use emails, so you don't have to worry about that. On the website, on the left side, you'll find this icon. Click on it and subscribe, and I hope I can help you. Thank you very much, and have a great evening with your family, and a great trading week or working week next week. Have a great day. Bye bye.